Thank you for reminding me on that. I really appreciate that. IAS 38, okay, gives the definition. So what are the intangible mean? Okay, so there are some key phrases, okay, here. Without physical substance, right? When you talk about land, building, equipment, you can touch it, right? It's a physical existence, right? So when we talk about intangible, we refer to the lack of the physical substance, okay? And identifiable, okay? Identifiable. So you have to be able to separately identify this asset, okay? Non-monetary, okay? What do we mean by non-monetary? This means a intangible asset is not financial assets, right? Financial assets are monetary in nature, okay? In chapter 7, we learned about the financial assets. Some of the examples would be patents, right? Patents, trademarks, copyrights, okay? So this would be fit into the definition of intangible assets, okay? And the customer list. So for people, if I want to buy an accounting firm, I'm actually buying their customer list, right? I'm buying their customer list. So that's their intangible assets. Software and movies, okay? Software, movies, this is all intangible assets, okay? Okay, so lack of physical substance. You're gonna maybe ask me a question, wait a minute, okay? Take a look at this picture. This software is packed within a box, right? And this software is stored in this disk, right? You can touch it, you can touch the box, okay? You can scratch, you can run your fingers across the surface of this disk. What do you mean by lack of physical substance, right? Right? This one, you can see it, right? So basically we are saying the tangible portion is incidental to the value of the item, okay? So if you think about this box, right? This box does not worth that much money, right? It is the program, right? It is the programming, right? The computer technicians, they work hours, you know, coding, put a lot of hours into the coding, right? It's that app, that software is the most valuable thing. And this box, this packaging doesn't worth that much, right?
All right.
Hey, Tulu, you have a question?
Oh, sorry, that was a mistake. Sorry about that.
Oh, no problem. Okay, so similar idea, right? This disk is just a storage media, right? The disk itself does not worth that much money. It's really what is inside the disk, the software, right? So we are not saying this just, you know, spiritual stuff, right? It's no substance. We are more talking about lack of physical substance, right? The most valuable things does not have physical substance. Does this make sense?
Yes.
Yeah.
Okay, good. Okay, so then we talk about non-monetary nature, right? Non-monetary nature. So you think about financial assets, right? You think about bond, right? This picture shows a bond that was issued 1969, June 15th, okay? So these financial assets, you know, does not have a physical substance, right? It's just a piece of paper, right? And that paper is not valuable. What's valuable is about this contract, right? This commitment, this terms, right? So then, you know, you have to also differentiate between financial asset and intangible assets. So for financial assets, it's in the monetary nature, right? So the intangible asset, okay, it's non-monetary, okay, non-monetary. identifiability. Okay. So you have to be able to separate this asset from others. Okay. That's what we mean by identification, right? You have to be able, to separate this asset from others. Okay. So then you can recognize this as an intangible asset. If you are not able to separate this from others, this is not an intangible asset, okay? Because you are not able to identify it, okay? So this identifiability is present, okay? If it can be separable or it's arise due to a contractual or legal rights, okay? So for example, patent, right? Patent, that's because of legal rights, right? That's about the legal rights. Goodwill, what is goodwill? Okay, so goodwill is the difference between the purchase cost of a business and the fair value of the individual assets. Okay, so if you a business, right, the individual assets value is 100,000. Okay, and the liability is 50,000. So the net asset fair value is 50,000. Okay, in terms of the individual assets. But when you buy it, you are willing to pay 80,000. Why? Because you believe all these assets pulled together collectively, it created value. And that is the difference is the goodwill. Okay, so when you purchase a business, you may have this accounting goodwill. Okay, so that is the goodwill. So whenever you are purchasing a business, okay, the actual price you are paying is higher than the fair value of the net asset. Okay, and the reason why you are willing to pay more is you have goodwill of the business, right? You believe all these assets together, okay, creates some synergies, right? So the creates some more value. Okay. So goodwill is distinct from other intangible assets. So you have to separately present the goodwill from the intangible assets. Okay. Now my question is goodwill an intangible asset? My question for you is goodwill an intangible asset?
I think
Yes,
Yeah, I would say yes as well.
Yes. Okay.
yeah.
Yeah.
Yeah. Goodwill is intangible asset. Okay, let's go back to the definition. So is it non-monetary, lack of physical substance? Is it identifiable?
Yes.
So you can identify it and it doesn't have physical substance, but
Isn't it monetary because it's the cash paid over top of the fair value? So it wouldn't be.
Okay, so how about identifiable? Can you identify goodwill? So identifiability comes from either you can separate it or from contractual or other legal rights. Okay. Do you have contractual rights or legal rights for goodwill?
Yeah, you do.
What's your legal rights for the goodwill? So if your goodwill is $1 million, is the law protect you of receiving $1 million in the future, or it's a contract?
No.
No?
It's the value of a company's brand name, solid customer base.
Yeah, but
Good
it's not
customer.
based on contract, right? There's no second party or legal party will be responsible for guaranteeing the value, right? So is it separable? Can you separate the goodwill from the other assets?
I think you only can separate when you buy the company. Not
Yeah. So suppose you don't have the other assets, right? Suppose you have no other assets. Can you have goodwill?
No, you can't.
Yeah. So if you don't have all these other assets, you will not have goodwill, right? So you are not able to separate goodwill from the other assets. The reason why you have goodwill is because you believe when all these assets work together collectively, it's going to create a good value, right? That's the reason why we have goodwill. When you have no other assets, you have no goodwill. So goodwill does not exist in separation from the other assets. Does that make sense?
Yes.
Yeah. Okay. Okay. You cannot sell the goodwill, right, without selling the other assets. So you can sell a software to another company, right? And you will still keep your equipment, keep your computer, keep your factory, right, land. But you cannot sell your goodwill to another company, right? So goodwill is not classified as an intangible asset because it does not exist if you separate. It does not exist on its own. Goodwill has to exist in the context of the company, right? And the company has to have other assets, right? Does that make sense?
Yes.
Yes. Yes.
Okay, so this is very important, right? Goodwill is not an intangible asset, okay? It's a separate class of asset, okay? You're gonna see this. If there's goodwill, you're gonna see there's a line on the on the balance sheet called goodwill, okay? Below the intangible assets. Okay, so make sure you understand that. Okay, let's take a look at this question. See if you got it. So identify which following items are intangible assets according to definition and IFRS. Okay, tell me yes or no. Okay, cash is intangible asset, yes or no?
No.
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 Okay, a currency derivative, intangible or not intangible?
Yes.
Yes. Intangible.
Okay. So can anyone tell me where did we learn the derivatives before?
Financial assets.
Okay, financial assets in nature is
They're tangible.
Asset. Yeah.
monetary, right? Monetary.
It's contractory.
Yeah.
It's
So it's monetary, right? So financial assets, the reason why we call it financial assets is because it's monetary in nature, right? So derivatives is a monetary asset. So the intangible asset is non-monetary, okay? So financial asset is not intangible asset. Does that make sense?
yes.
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 Okay, good. So this is not. Computer software applications.
Yes.
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 Okay, that one is yes.
Yes.
Good. Purchase the goodwill.
No.
Yes. Yes.
Yes.
Yes.
No.
No, because you
No.
can't.
We just
separate
talked
it.
about it.
Yeah.
Yeah,
no.
exactly. We just
Yeah,
talked
you
about
can-
it, right? We just talked about it. I mentioned goodwill is not an intangible asset, right? How about the internally developed goodwill?
No.
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 Yeah.
No.
It's still goodwill. Okay, no. Okay. Trademark.
Yes.
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 Okay,
Yes.
very good. Okay, so at least I think you kind of have a little bit better understanding about what's the definition of the intangible assets, right? So goodwill is not financial assets like the bond investment stock shares, right? Those are all financial assets. They are not intangible assets, even though they lack of physical substance. But in nature, they are monetary, okay? So therefore, they fit into the financial assets, but not the intangible assets, right? Okay, very good. So goodwill, the definition, okay, is purchased cost minus fair value of the individual assets and minus the liability, okay? So economic goodwill, what do we mean by economic goodwill, okay? So, you know, for example, right, Apple, right? So just this brand has an economic goodwill, right? So people, they buy this kind of Apple product because it's Apple, right? Apple Watch, right? Whatever, if it's Apple, I want to buy it because I really love the brand, right? So the branding, sometimes maybe the company is socially responsible, right? They care about the environment. They donate a lot of money to the poor people, to different charity organizations, right? You have, you know, you buy their corporate value, stuff like that, right? So that's called economic will. Because you are who you are, you attract customers, right? Individual or personal goodwill. Think about Steve Jobs, right? Steve Jobs. So, you know, because he's a CEO, people think Apple is going to do well because he's the CEO, right? You know, if Stephen Jobs passed away, right? He passed away, maybe the stock price will decline, right, in the market. Just because a different CEO may not do as good job as Steve, right? So then the type of goodwill we are talking about is accounting goodwill, okay? So the accounting goodwill only happened when there is a purchase, okay? So companies who have never acquired a business, they will have no accounting goodwill, okay? They can have personal goodwill, they can have economic goodwill, but they won't have accounting goodwill. That means you won't find that goodwill account on the balance sheet, okay? Okay, let's take a look at this question. Determine the amount of accounting goodwill or other amounts by completing the table below, okay? So you have a bunch of assets, right? And you know the carrying value, which is the book value, right? And you were given the fair value, okay? A bunch of information here. So you know the total assets, okay? We don't know here. Okay, and then you know total liabilities. What you know is the difference between total assets and total liability is called net assets, okay? So your net assets equals total assets minus total liabilities, okay? So how are we gonna determine this A, B, C, D, E? And the E is the accounting goodwill, okay? So how are we gonna know B? Anyone can tell me how can we calculate B?
You can add your total liabilities and net assets together.
So I'm going to add these two numbers together. That's my total assets, right? So I'm going to have 167,000, okay? So I should have here 167,000. Okay. And then how can I know A? What is A?
That's all your other assets from total assets.
Okay, so total assets, I'm going to just subtract all these numbers, right? Okay, so what is that gonna be? Okay, 79, 70, 45, 70 minus 45, 25,000?
Yeah, that's right.
That's right.
25,000, okay. Now, similar idea, I can calculate a D, right? My D is the plus of these two, be 202,000, I think. Yeah, 202,000. So D is 202,000, right?
Yeah.
Okay, and then I work backward. C, boy. Okay, so that's gonna be 52, 150, 150, 48. Boy, 92. Is that 92?
I got
102.
102,000.
Okay, 102. Okay, good.
102, yeah.
102,000. Okay, thank you. Okay, and what is my accounting goodwill? The purchase price is this, right? The purchase price is this, and your total asset minus total liability. This is our fair value, right? Is 97,000, but you are willing to pay 121,000. So the difference is
24.
24. 24,000 here. Okay, 24,000. So this is going to be your accounting goodwill. Okay, so this is your accounting goodwill. Does this make sense?
Yep.
Yeah. Okay. So how you can have a accounting goodwill when you buy a business? Okay. So you are paying, 121,000 more than the fair value of the net asset, which is 97,000, right? So that actual would be your goodwill. Okay. This is not too bad, right? Okay.
What's the main reason you would overpay?
So this, for example, this is the value, the fair value of the individual assets, right? So you are telling me that, okay, this PPE, if you sell the PPE, you will get 102,000, right? If you sell your inventory, you get 31,000. Your account receivable, this is all the fair value, right? So when you add them up, you are just you are just doing the sum of the individual assets, right? But when these assets together, they created a synergy, right? So when you pull all these assets together, collectively, they're gonna create more value. Does that make sense?
Yeah, thanks.
So it's not like you are selling the business, you are selling the asset one by one, right? You are using them together, okay? As a company, this whole operation, you believe there's actual value. That's why you are willing to pay more. Does that make sense? It's goodwill because you believe the company will be profitable, okay?
Is it possible to have negative goodwill?
No, that would be bad will. No, I mean, so no. If somehow you are willing to pay less, that means this company is losing money, right? Because otherwise they will not sell you. A profitable company will not sell you less than the fair value of that net asset, right? The only reason they are willing to sell you under that value is because they are not doing well, right? They have some losses over the years. But it may then you would ask, well, why would you buy it if there's no goodwill, right? But there are different reasons you buy non-profitable business. There are some tax implications, right? So the losses incurred by the selling company, you can use it for your own company, right? Maybe this is about your supply chain, right? So this company isn't poorly managed by the seller, but you are confident you are able to manage it much better, right? So there are different reasons why you may purchase an unsuccessful business that has no goodwill, okay?
Okay, thank you.
Yeah. Very good question. Okay. So I'm going to stop here. Just give me 1 second.